Welcome, ladies and gentlemen, to Commodity TV and the Mining Newsflash with Bluestone Resources, Uranium Energy and EnWave. Bluestone Resources filed the NI 43-101 technical report, the preliminary economic assessment on the Cerro Blanco project. The recent completion of advanced engineering and optimization work significantly improved the understanding of the Cerro Blanco gold project and provided the opportunity to exploit the near-surface high-grade mineralization through an open-pit development scenario. The optimized project doubles the gold resource ounces and production profile, tripling the project's net present value, an NPV at 5% discount, to $907 million. Peak production is then 334,000 ounces and average annual production is 231,000 ounces of gold over the mine life. Average operating costs at the AIC are reported at $640 per ounce net of byproduct returns, which is very favorable. Average annual free cash flow is $186 million US dollars, and total life of mine free cash flow is $2 billion US dollars. Bluestone has a market cap of just 230 million Canadian dollars. Thus, the annual cash flow each year would already represent today's market cap. A blatant undervaluation of the shares as of today, we think. The internal rate of return after taxes, the IRR, is at very good 28.5%. Mind you, everything is calculated with only $1,550 for an ounce of gold and $20 per ounce of silver. This gives a lot additional room for improvement economically. Initial capital is $548 million with an after-tax payback period of 2.6 years. Bluestone shares are very cheap valued. There is a chart breakout at $2 Canadian dollars and 30 cents with price targets around the $8 Canadian dollar range. Uranium Energy Corporation completed the first 40 development wells on its first production area of the Burke Hollow ISR project in South Texas. Uranium is poised to become a green energy supply in the US, but also in many other countries around the world. UEC can quickly resume production at any time given appropriate price movements. Burke Hollow's original production area, the PAA-1, is the newest and largest in-situ recovery ISR area being developed in the US. Strong results demonstrate the potential for further growth within PAA-1, which has multiple drill intercepts that have a grade by Cygnus short-named GT of 2.45 to 4.48 degrees. This is well above the cutoff grade of 0.3 GT for the ISR resource estimate and development of the drill field. Using UEC's hub-and-spoke strategy, this is anchored by the fully licensed Hobson processing plant. It comprises 5 ISR projects, including the fully permitted Palangana, Goliath and Burke Hollow projects. Ongoing drill field development and resource delineation drilling at the Burke Hollow ISR uranium project is progressing well. As of 9th April this year, a total of 40 resource delineation holes have been drilled using the 2 drill rigs. Drilling continues with additional resource delineation test drilling, followed by the installation of approximately 45 additional monitoring wells in the field to contain the trend extensions. These drill holes complement the 76 monitoring wells previously installed. The continuity of the uranium roll front and the intercepts of exceptional uranium grade are impressive. The development of Burke Hollow, the only recent uranium discovery in the US, continues to show the potential to be the largest deposit ever discovered in the Goliath Formation in South Texas uranium trend. Plans are being made for additional production areas at Burke Hollow, giving the company a strong pipeline on the 19,000-acre property, including defined resources outside PAA-1 and several exploration targets and anomalous areas that have been poorly explored. The project area is located just 50 miles southeast of the company's Hobson processing plant. Burke Hollow has received all 4 major permits required for uranium extraction from the Texas Commission of Environmental Quality and the Environmental Protection Agency. UBC is well positioned for the coming uranium price upswing, and the stock continues to have decent potential. Chart-wise, we arrive at a $7 US dollar price target. EnWave Corporation announced today that the company has completed the sale of a royalty-bearing 10 kilowatt radiant energy vacuum machine to Newswave Foods. Newsflash is a Canadian company focused on bringing new and innovative shelf-stable bakery products to market. They had already entered into a license agreement with EnWave to use the REF technology for a range of shelf-stable bakery products in November 2020. And must purchase a REF machine rated at 60 kilowatts or more to receive exclusivity for its range of shelf-stable bakery products granted under the license. Newsflash markets a range of extended shelf-life bakery products including donuts, fritters and cheesecake products, and is actively seeking distribution in Canadian grocery retail. This advancement in bakery reduces retail spoilage and minimizes the risk of products spoiling on store shelves without being sold. Once material distribution is secured, they will need large REF machines to meet their customers' demand. So, EnWave is back in a great new area in the food industry and steadily expanding their portfolio. The stock is cheap and the price target sits at $2.50 with us. My team and or myself are or may be shareholders in the companies presented, and they are or may become part of the SRC Mining Special Situation Certificate. Thanks for watching us, and bye bye from Switzerland.